The fear of missing out. I've been investing since 1996, since before the dot-com crash. That's 26 years. And I made every mistake in the book multiple times. But the mistake that I repeated over and over and which cost me so dearly was FOMO, the fear of missing out. In today's video, I'm going to show you the 3 strategies that I finally figured out how to use to control this scourge to investors everywhere. Hey everybody, Joe here, Joe's Investment Express. And before I show you these 3 strategies, I just want to encourage you to check out my Patreon page where you can see my current portfolio every week and my focus list. And also, I just want to remind you that this is not financial advice. This is just for education and entertainment. Now, is the fear of missing out ever a good thing? In real life, yes, definitely. Let's say you're walking down the sidewalk and you're single and you're lonely and you're alone. You've been alone a long time. And walking in the opposite direction is the most beautiful woman or handsomest man you've ever met. And you get closer to them and they smile at you. Then that, my friends, is the time to act. If you don't act and say something, you are going to miss out. And that might be the only opportunity you ever have with that person. But investing is different. For starters, and this is strategy number 1, there are 10,000 stocks in the stock market. And you can buy any of these with the click of a button. So when you see that so-called perfect stock with perfect fundamentals, and it's just been going straight up, and you know you shouldn't buy it because it's overbought or parabolically ascending, you got to remind yourself, this isn't the only stock in the market. There are 10,000 other stocks. Throw it on your watch list, wave goodbye to it temporarily, and do some more research. I bet within 15 minutes or half an hour, you'll find another really good investment opportunity. Now, here's number 2. So, true missing out means you will never have another opportunity to buy a stock. But if you look at the uptrends in some of the most spectacular performing stocks, for instance, if you look at Tesla from, say, 2019 to late 2020, did that stock only give you one opportunity to get into it? No. If you look at that chart, and I'm not going to pull up charts right now because frankly, I'm kind of tired of staring at charts. But if you pull up that chart, you will see that Tesla formed 4 or 5 really good bases on the way up and broke out of each of those bases. And if you look at a company like Apple, if you look at its 20-year chart, you will see that it gave you many low-risk entry points. Good stocks, when they're in an uptrend, they go up 10 or 20 or 30%, and then they form a base. Then they break out and they go up another 10 or 20 or 30%, and then they form another base, etc. So if you see a great stock that is broken out of a base and is overbought and has gone up and up, just wait. If it's really a good company and a good stock and the market conditions are good, it's going to make another base and you can get in at a low risk entry point. Now, here's my third. This is my third strategy, and it's kind of a strategy of last resort. Let's say you know darn well about point number one that I just made. And point number two, but you've been watching a stock go up every day for weeks, relentlessly, and watching it go up without you is just killing you. It's keeping you up at night, thinking about all this money that you're missing out on. This fear of missing out is what? It's making you crazy. Well, then you do what David Ryan calls... Sorry, I forgot what he called it. This is what David Ryan calls a mental health buy. David Ryan was a two-time investment champion in the the big investment contest. But anyway, multimillionaire, etc. So here's what you do. You just buy one share. Now, if this is a $1,000 stock or something, then don't do this. But let's assume it's under $200. So, okay, give in. You know it's wrong. But buy yourself one share. Put an arbitrary 7% stop on it. And now you can rest easy. You're in the stock. It's not leaving you behind. It's not going to go up without you. You are in the stock. And then one or two things are going to happen. Probably what's going to happen the day after you buy it, it's going to take an abrupt change of course, come down, stop you out, and then you can tell yourself, yep, I know, that's why I don't FOMO into stocks. Or it's going to go up a little while. It's going to set up into a good base. The volume's going to quiet down. Then it's going to break out on big volume, or conversely, maybe it's going to move sideways and the 50-day moving average is going to catch up to it. Then it's going to bounce off the 50-day. And then you can load up on shares at a low risk entry point. That's called a mental health buy. I do that from time to time, even though I shouldn't. Usually it's only a $50 stock or something. So it costs me like, I don't know, just a few bucks. That's worth it to keep my sanity. Well, everybody, those are the three strategies that I use to conquer fear of missing out. Let me know what you think about those, and if you have any other ideas or if you have any FOMO stories, if you could consider liking this video, that would help get it out to more people. And at the end of this video, I have made a bunch of other investing videos. If you're interested, you might want to check those out. Okay, buckle up, everybody. It's going to be another wild week in the market.